Okay, this is just going to be a quick overview of how to trade within an invested ticker. So trade within a stock that you are already invested in, that maybe you have a high average on and want to average down. Now, there's a lot easier ways of making profit sometimes if you aren't quite in a ticker that has the momentum, enough people trading and stuff, depending on how many shares and stuff you're working with. So one thing that I do like about trading inside of the ticker that you're already invested in is that you can keep an eye on it. So if this thing takes off suddenly, you're there. Or if something happens and suddenly it's like just tanking or whatever, you're there. But, you don't always want to keep your eggs in one basket. But sometimes you have one basket that might be possible it goes really, really big. And, then you have your other tickers that maybe are a little bit more stable, like a Apple or a Microsoft or Zoom or, one of those. Anyways, so trading within a ticker, to lower your average, obviously the trick of the trade, you want to sell high, buy low. Only I like to rebuy low and also reinvest. So any money that I've made, I reinvest it, which it just makes it that much more. And you can always pull it out at the end of the day. And when it comes to a different type of trading, just trading in general, not investing, you would pull it out every day at the end of the day. And that's not necessarily a bad idea, but then you also risk losing out if it rallies. So for instance, and things when they rally quick. You know how that happens. It can be up in minutes, in seconds sometimes. So to pull out, overnight or whatever, obviously you run the risk of that. But then again, you also, are pulling out from risk too of it dropping. So, it really just depends, I guess, kind of like on how volatile the market is. I don't know. So sell high, rebuy low. Now how you do that, how do you know, okay, well, let's put it this way. If you've been watching this particular ticker, one way to, if you haven't been watching it, one way to kind of get a general idea of how it's been trading is look at the last 5 days, because you can at least see the ups and downs of that day, the volatility of that day. When you look at more than a day, you're not going to be able to see that, unfortunately, which sucks. Because then you can't tell, okay, where's this ticker at? Where is it at its highest? Where is it at its lowest? So if this ticker every day, because a lot of times they'll be real high in the morning and then they'll drop down. If that's the case, then why wouldn't you stay in overnight and sell when it hits that high and then rebuy down at the bottom, right? Now you also have to keep in mind, sometimes it is hard to get the price that you want, but usually if you're patient and you don't let your subconscious worries and anxiety get to you, and you just limit your order, let it fill. One thing that I've, this is me personally, but I believe that, the higher power is never going to give me something that I can handle. So I'm never going to get, just got to chill. Everything's always going to be okay. And that's the same for all of us. So just, it's funny how much better things go when you're not worried about things. Anyway, so that subconscious anxiety, that's a huge deal. And I know even the best traders get that subconscious anxiety. It's that thought of, I'm afraid to sell because, hey, what if it rallies up? Or, what if it corrects all of a sudden and I miss out on all that? Or, it's never going to go this low again. So, if I sell right now, but I'm going to tell you one thing, that's one of the biggest mistakes you can make. And I just made that mistake myself too. I should have decided on a loss, chose that and got out. You got to before you go into an investment, you got to decide, where do you want to get out at? And that goes for losses, but it also goes for your gains. If you, let's sit here, like for instance, I made over $35,000 on iBio, surging from 140 to the 170s, because of the amount of shares that I held in it. Because I did not sell thinking, oh, it'll stay up, because I did not sell, I literally lost more than that over the next couple days. We don't need to go into that. Anyways, my point being that I've made a lot, but I've also definitely lost more. And that's because I have not set my goals prior to making those investments. So decide how much you want to lose, or you're going to jump out at, and decide how much you're willing to take before you pull out. And always know that your highs will always settle. New highs always settle. So that iBio at that 170, 80 area or whatever it was actually, settled back down into the 160s, and then eventually even dropped down further than that, back to the 140s. And anyways, so point being, another thing, a downtrend. So the downtrend where you keep seeing these new lows, get out of it, have that goal set, get out, and, let it downtrend, and then wait for it to uptrend again, and then get on in it at that point. Get in after it starts uptrending. One thing you could do is learn charts. Charts are so much more in depth than people make them seem. You have to look at percentages. You have to look at time, weeks of time, all the different math and everything. So charts are a lot more than just looking at it and being like, oh, it looks like a teacup, or, oh, it looks like this or that or whatever. There's an amount of time that it has to be. Usually when people are looking at investing in things, they look at a minimum of a month. And I believe that's probably on a short end swing trade type thing. Seeing how it's been trading over the last month. I like to look at pretty much all the charts. I look at the, when I'm going to be trading in it, I look at the week chart to see, I look at the week chart in all of them, and I look at more than that in all of them too. Trading or not, actually. But I eventually, my end chart is the 5-day, because I want to see what it's been doing and how it trades during the day. So, I like to first look at the month chart, then check out the 3-month. And then after that, if the 3-month and the month look good, then I'll look at the year and the 5-year to make sure that it's not just some short thing that's been going on. And also, because of all the retail traders right now that are in the market, flooding the market, it was very surprising to a lot of people how we recovered like we did from the coronavirus pandemic. And that's because a lot of people like to chop that up to the retail investors. And I do too. I think it's definitely the retail investors. I see stocks that literally should not be up, like Microvision. It was one that was up huge, and they were even warning that the thing was up like more than it should be. I mean, we're seeing companies that have no product launched, or and I mean, these are not new companies. These companies have been around like 10 years or more, but no product launched. Their financials are bad. It's like, why in the hell would you ever invest? But they're making money because people, they're a trend investment. So it's like, if you just follow these people and where they're investing at, you can literally probably make money just by following people these days. That's how crazy it is. Stocks that should be going up are not going up, and vice versa. So it's kind of interesting. Okay. So rebuy at the bottom, let it start trending back up. Use the volatility daily. If you don't, just get out of it, and then every day just trade off the volatility. So don't stay in it, so that way you can still watch the ticker and see and make sure that you don't miss out on it rallying, because you've been watching it for months and you don't want to miss out on it, like you have so many probably already. I know I have. That's another thing too, you know, we get so consumed sometimes with these tickers that we don't excuse me we just get, you know, into them, and we don't see the other ones that, you know, just went up however much percent, you know, 50, 20, 100, whatever. So that's another thing, you know, those are those emotions that you don't even realize are getting you, you know. So you gotta get those under control. You know, another thing that those emotions will do, a lot of times will make you think that you got to make a quick choice. Don't make fast choices. It'll be there tomorrow. If it's meant to be, if it's a good company, it's going to keep going up. So you're not going to miss out, okay? So don't jump into it unless you're literally trading it, like, I don't know, whatever, just making a quick trade. Don't do that. Like people, when they chase, remember how I said the new highs always settle. You chase a ticker, you don't realize, well, that it's reached its high and now it's going to come back down, and you're thinking, oh, it's going to come back up, and no, it keeps going down, and you just lost all that money and you're stuck in that ticker. So that's kind of like where this whole, though, trading within an invested ticker, that's kind of where this all comes from. So when that happens, per se, this, what we're about to get into more, is what you would do to kind of try to fix the problem, at least. So, okay, now, okay, so now, like I was talking about, finding the, we need to find the highs and we need to find the lows if we're going to trade a stock during the day. We need to, if we're already invested in it, obviously we need to sell some at a higher price than what it's going to be trading out for the day. We don't have to sell it for higher than what we bought it for. We have to sell it higher than what we rebuy it for. Okay? So let's say, well, that pretty much makes sense. And gosh, if I had to explain that, you should probably not be trading. Okay. So, again, I'll re-say it though. You don't have to sell for what you bought it for. You have to sell higher than what you will rebuy it for, because you're going to stay invested, but you're going to rebuy the ticker at a lower price for the day. So, you'll be able to obtain more shares if you decide, or you can pocket the money. Today I made one trade, a couple minutes, literally, I don't even think it was a minute long, over $400. I really wanted to get a couple more in, but, I didn't. So anyways, but that was the thing. So I picked up more shares because that's what I do. I just accumulate, and then eventually lots more money. So, now you find the range for the day. Usually that's pretty easy to find. Obviously after a couple ups and downs. However, and you're never going to get the very top, and you're never going to get the very bottom. So don't try. You might, and it's possible, it is possible, but you're also increasing your risk of if you're going to get that order filled. And not only that, but think about all the times if it misses that fill and it goes through that range again, you're missing out on that whole trade. You're missing out on the whole trade. So whatever you're trying to make more of, you're actually losing in the long run. So, you get it done, be done. And do it again over and over and over. That's the thing. You gotta do it over and over and over and over. You don't have to, but you can. I'm just saying, the more you do it, and you can, especially with the right volatility and the right what is it called? I said it earlier, momentum or whatever in the stock. So like one that has a lot of volume for the day. Okay, so now finding a range. Okay, you have a couple ways of doing that, but finding the range that you are in at the present moment, that is a trick that I can share with you. So to find the range that you're in at the present moment, you can look at the orders for one. Orders will be back to back. So what you're going to do is you're going to use the range that you've already seen it kind of hit and stuff like that. And then what you, or actually you can kind of follow it this way. But it's possible it could fill, and it may be for less than what you could have filled it for. So nothing's ever guaranteed. So we try to minimize the risk and maximize the reward. So the gaps in the orders. When an order is trending up, you're not going to have any gap in the order. So you're going to see, let's say it's a penny stock. So you're going to see, say, like 0.101 or 0.1001. And you're going to see a sell of 0.1002. So they're going to be back to back, 1 to 2. Then it's going to go 2 to 3, 3 to 4, 4 to 5. Or it may not be one like just like that, but they'll be together. You're not going to have a gap in the pricing between the bid and the ask. When the price, usually how it works, when the price is about to drop, the gap will widen, and that's when you'll see the price fall. You can also watch the tick by tick. I like to watch the tick by tick a lot of times because there are what you call a market maker, which are the people that actually fill your orders, sell you your shares, because not everybody's going to match up every time on the orders. And that's also why they're the ones that create those gaps and things, because they need to be able to buy shares for a lower price than what they're selling them to you for. So that's the reason for that. And you do need market makers, and they say they don't manipulate the cost, but they do, and people believe that they do too. It's a thing. That's what they say. People believe that they manipulate the price, but technically, but you have to have market makers. It's not an option. Excuse me. Sorry. Allergies. You're not gonna die. You're not gonna get coronavirus through the thing. I don't have it anyways. Anyways. Okay. Sorry. Okay, so let me make sure I didn't miss anything there. So yeah, so when it's trending up, you're going to have the back-to-back. The gap will widen when it's about to drop. Let's see here. So watching the tick by tick. There's also market maker signals. If you look that up, you'll see what I'm talking about. And that is what I would recommend watching the ticker or tick by tick for of the orders. Okay. Okay, so we went over that. See, you're not always going to get in at the top of the bottom. Okay, again, choose your choices of your price target or the profit you want to make, and then get out. Same thing with loss. Now that's more for like a trade type situation, like a penny stock trade type situation. When you're invested into a company, I sure hope that's not how you're trading. That will be another video. Okay. So the particular ticker that I was asked about, that one I've noticed pre-market is when it's at its very highest. Now, depending on the order you're trying to fill, I think would depend on whether or not you can trade during that time. And it seems that as soon as it opens, it has been, it immediately starts its downtrend. Today, I don't think today was that way, but that's the average trend for this particular one that I have noticed. Let's see. Oh, yes. So also I'll notice that it goes up and down, I want to say in about 2 to 3 times. So you'll get a real nice high, you'll get a real nice low. And then after that, you'll get like 2 more medium ones that you can trade the volatility off of. So you're getting 3 trades there. Again, don't try to go for the very highest. Don't try to go for the very lowest, and you'll make each of those trades. If you do, you're going to miss them, and then you're not going to get a trade at all. And obviously, you're not making anything if you're not doing anything, right? Something's better than nothing. Don't get greedy. And I'm telling you all these things. Damn, I wish I could follow them because it works. I try my best to follow them. So anyways, another way to trade this particular stock that I was asked about is, and there's others that are like this too, that you can do this with, and pretty much everyone. But trading daily off the volatility. So you might have noticed that there might be up days and then down days. You can pull out, reinvest on the low, up, down, pull out. I mean, you can do this over and over. And that's like literally, it's just a lot of times for me, I know that subconscious anxiety gets me, and stupidity, I don't do it. So pretty much we're done here. I like to reinvest to make more profit, and I can pull it all out at the end of the day, and it's all the same. So unless it drops, but try not to allow that to happen. Try to get it in at the low, so it's all profit. Another thing a lot of people don't think about is when you're selling, it's okay to buy increments, like when you're first investing into a company or whatever. You don't want to buy, all at once or whatever, right? Because what if it goes down more? Or what if it goes up, or I don't know. There's a reason for it though. And you don't do it all in one day. In other words, like TQQ, that would be one where personally I would invest. I had that when it was at 43. I had it at 43. That is one where, I would buy in, because it was going down for a little while there. So, but it wasn't every day. It would go up. And anyway, so point being, a lot of volatility, back when all this market craziness first started happening. So I guess maybe that applies more to that. But, when it comes to sell orders cost, the big ones, they can only charge as much as, I want to say it's like $4.95 or something. So if that's the max they can charge, and you're going to be selling a bunch of shares anyways, then sell them all, right? Yeah. So instead of doing like a 25,000 share order, I'll do 100,000 share order. I mean, it's that much more money anyways, and it's costing me less. So boom, there. And then also, I hate Webull. I do hate it. Hate their trading platform. I hate the limits they put on their trades. I find it sneaky. I mean, seriously, you're talking about, you will only let me sell 100,000 shares at once. You won't let me sell 100,001, and you won't let me make more than a $3 million profit on it. I'm not saying I've made that. God, I wish. That'd be amazing. I will. But I'm just saying, anyways, it's just ridiculous. And then plus I can't sell all of them. I rely on selling big chunks at a time. So anyways, well, I hope this was found to be helpful, and I hope it turned out okay. Last time I got interrupted with a phone call. So, all right. So this one again was regarding trading within a invested ticker that may be on a downtrend, or you may be down and you want to increase your shares or increase your profits or make something on the daily since it's in a downtrend. There is ways to do that. Till next time.